Hi trader. Okay, this is Weekend Trade Recap. Welcome to my YouTube channel and also my Instagram. I do post the video on Instagram too. So this is Weekend Trade Recap where we talked about the trade we took during the week and how it plays out, what is the strategy used, and what gives me the probability that the trade is going to work. So uh, this is let me check. Okay, we want to look at this trade here that we took on Friday. Gold sell limits and okay, before I put on the annotations, I just want you to look at the chart. Like just look at it in a way like, oh, can I see it? Like just uh focus on the chart and see if you can see the whole thing. Like the whole thing is actually my strategy. I've been talking about it on my YouTube channel. Like this strategy, I've been talking about it on my YouTube channel. So I'll put on the annotations right now. Okay, this is the whole trade here. Just 1 to 2. That's 2.1, right? Okay, let's talk about why I took the trade. The strategy used for this trade here is what we call the time and price strategy. But not just when it comes to the time is actually important. The time is a factor that is very important in the forex market. Time. When are you taking the trade? But the other thing is price. You see, people talk about price and they were like, okay, the market is all about price. Yeah, the market is all about price. There is pricing. If there is no price, then how is it the market? So, but there's something called the price to me. That's it's called the entry pattern. There must be an entry pattern that will give you an edge of the price. Okay, this is where I want to buy from. So it is time for plus price, but the price now is where I call the entry pattern. And my entry pattern here is called the intermediate time high strategy. I've talked about it before on my YouTube channel. Okay, this is it here. If I have a high, then another high, then either market breaks it or not, right? But let's say it breaks it, the market creates another high. Then the moment market breaks this low, they come back to this low high. So this is like this. What gives this strategy a proofs? First is the time. When is it happening? So it's not just happening anywhere. When? So first thing is I must have an intermediate time high. This is an intermediate time high. The moment this low got broken, it means that this high is confirmed. Then a high lower to the left side of the high and a high lower to the right side of the high. Then that's what makes that high an intermediate time high. So which means that if truly market want to sell, the market should not go back to this high. It must be secured until market gets to an intermediate time low. So there must be an intermediate time low opposite it for liquidity seeking. So the moment markets create this whole structure inside the time range, and what time range am I using? I'm using New York Q zone open and New York Q zone close. So I'm using the New York Q zone range, which is 8:30 to 11 o'clock New York time. New York time. So that's the time range I'm using. So the moment market enters, the moment market creates these structures, then what confirmation now is that there must be a fair value gap. That is my entry. So which means that I'm having an intermediate time high plus MSS, market must break the structure, then plus fair value gap. That is all about the strategy, but it must happen in the New York Q zone. That is all about the strategy. Okay, let me show you on the chart. Number one is that we have this high. When market took out the liquidity here, you can see this high. Market goes down, then come up, took out the liquidity, then break this low, they create a new high. Though this high to trade into a fair value gap, but that does not give confirmation to the trade, right? I have to wait for a new high to be created. So which means that for it to look like this, so I have a high, then a high that will confirm my intermediate time high. So the moment intermediate time high is confirmed, then the moment market breaks this low, the moment market breaks the low, they create a new fair value gap. This, then that is my entry. That is how I put the trade, and I was like, this is my whole entry pattern for price, then the time too is actually at right, like I'm at the right time, then the price too comes at the right time, so everything is right. So that is how I enter the trade, the fair value gap, and that's what gives me that 89 pips and 2.1% price. So this is the trade here. You can see it here before market plays out, and after market plays out, just one candle. The one candle that trade into the fair value gap trade back. Just one candle trade. That's how trading in the zones. This is actually part of trading in the zone actually, because this is talking about time. We are still going to get to the time part, because if you watch my video on trading in the zone, I talked about context, right? So we are still going to get to the time part, and the time part is when we're talking about um, having to stay in the kill zones. Just stay in the kill zones. I think that will give you an edge than just trying to trade all over the whole time and everything. So that's it. That's it, everything. So thank you very much. Don't forget to like, share, and subscribe, and watch out for the next video. Thank you very much. Yeah.